The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Good morning, everybody. Great listening to Steve there in the prior hour. As he mentioned, I am here in Santa Fe, New Mexico. Hope everybody had a great 4th of July. I sure did. As I said on Tuesday, I did what I planned to do. I went down to the Santa Fe Plaza. If any of you have ever visited this town, you probably recall that. Sort of the old school plaza that the Spanish settlers set up way back when. I guess that was really typical in all kind of small towns in centuries past. They'd set up a little plaza down there. And what happened? They had a terrific classic car show, so we got to take a look at those. And that was a lot of fun. I particularly like those American muscle cars from the 60s or sometimes early 70s. Really enjoy seeing those. But just classic cars sort of all types. And that was a lot of fun. And they had a bandstand, an art show at Santa Fe. Of course, there's an art show. The Native American artists, who some of them are just some fabulous fine artists in terms of the jewelry that they make. Those folks were out there in force, as they always are, under the Palace of the Governors. Little awning there. If you're familiar with Santa Fe at all, you know what I'm talking about. So just a lot of fun. Good day. They do a Rotary Club fundraiser down there, and we went down and checked that out. Feels like a holiday week, doesn't it? I guess because it kind of is. Looks like we've got the indexes just checking our off earlier lows. And just taking a look here, as I typically do, I put up a chart of the IWM. Seeing some modest gains today. Last I looked here, I'll take another check. Oh, yeah, it's improved, actually. It was just a fractional gain earlier, up about almost 0.3% right now. And we've got the NASDAQ in positive territory. So, you know, as everybody, if you've been following the news, listening to Steve and other shows, as you're well aware, we did have some jobs data this morning, and much more to come tomorrow. We will have the June non-farm payrolls released tomorrow. It's kind of a funny name, isn't it? But I've never really thought about that too much, but it is kind of a funny name. So the non-farm payrolls from the Labor Department for June released tomorrow, and based on some of today's data, those numbers have been revised higher, and you know that can always be a fool's game, get caught in these things. And as I mentioned earlier in the week, I'm really kind of laying low this week. I did take some positions in some index ETFs earlier in the week, and again, not in the Low Price Leaders newsletter, really more in just one of my own personal brokerage accounts. But I'll tell you this, I'll be transparent. I also took a position in Apple earlier in the week and a couple of these index ETFs. And I'm a trend trader, so I am just going to see where all these continue trading relative to their short-term moving averages. That's really the line that I've drawn in the sand, so to speak. And sometimes a pullback to some of these shorter-term moving averages can offer a chance to get in at a lower level. And we are going to be releasing the Low Price Leaders newsletter later on today. And I was working on it last night, and there are a number of stocks that did rally higher while the market was in a downturn. And that's a sign of strength, actually. That's a good sign. Right now, I am monitoring some of these for pullbacks to that 5-day line, maybe even the 15-day line in some of these cases, and that could provide us with a new entry opportunity, assuming that the market uptrend does remain intact long enough for us to take advantage of some of these. But we do have a very successful trade on right now at the moment. And let me just check where we're at with that. Yeah, we're up again today on that one. And again, with that particular small cap name that I'm talking about, that we do have a trade on in the newsletter at the moment, we do have, I am watching the short-term moving averages right now to see where it is relative to that. Right now, it's fine. And of course, as the stocks, all of them, as they trend higher, those short-term moving averages are going to trend higher as well. So I'm liking what I'm seeing out there. There's some good action, but just based on the fact that we have lower volume this week because of the holiday, completely with this jobs report that's due out tomorrow that has been a market mover, throw into the mix the fact that now everybody's looking to the Fed again to see whether or not QE is going to be more of a reality. So all of that is factoring into what's going on, and it seems that it would be in many, many cases more prudent to wait a bit till either we see the reaction to some of these jobs tomorrow, or just for Monday when we do see more traders returning to work and we do see some kind of normalization of the volume across the major indices. Okay. So, yes, I have that chart of the IWM up there in front of you on Tiger TV. Of course, the Russell 2000 ETF pulling back just slightly, pulling back just fractionally from where it was a moment ago. But I'm not going to sit here and give a tick-by-tick report of what the IWM is doing today. What I wanted to talk about today, just one of my favorite themes, and for those of you who are reading the newsletter or who are listening to the show on a regular basis, you know I do track recent IPOs. When I say recent, the broader definition of that is stocks that have gone public in maybe the past 10, 12, maybe even 15 or so years. In other words, it's a pretty wide definition of recently public company. The reason I like these, if you go back and you look at the charts for a lot of these names, and obviously Apple is an exception to this, but over time, I'm not necessarily talking about exactly at this moment, I'm just talking about Apple's leadership over the past several years. But if you go back and look at longer-term charts, you do notice that many of the stocks that went public in the past 10, 12 years or so are frequently 75-80% of the best leaders in the market when you come to a combination of earnings growth strength, earnings growth driven by revenue growth, and in terms of price gains. So when you look at that, you do tend to notice that these are frequently among the strongest stocks in the market at any given time. So just taking a look at the much maligned May 18th IPO, you all know the one I'm talking about here. I'm going to put a chart of this right up here. There it is. There's Facebook on a daily chart. Let me put this up here for you on a weekly. And obviously, when I'm talking about IPOs, I'm going to drift off the small cap theme just a bit, but that's okay, because I'm always going to be looking at the small caps and the lower price stocks in the context of the broader market, never in a vacuum. So Facebook, if you tend to take a look at it here, I've got it up there on a weekly chart. And fortunately, because it is so new, we can see the entire weekly chart up here. So we did see, this is actually pretty typical. Let's just put aside all the hoopla over the NASDAQ and how they botched the opening day, which it is true that they did, undeniable. If there were any, how do I say this, not questionable, I'm not saying illegal or unethical, but just anything on the part of Morgan Stanley that maybe, who is the lead underwriter, that maybe makes you go, put aside all that, and you take a look here, you do see Facebook had that opening day pop, if we all remember watching this back on May 18th. Now, it's very, very typical for a new IPO to have a run-up, And sometimes it can last for weeks or months, not necessarily hours, as was the case here. But really, that doesn't matter. So in this case, it was hours, minutes perhaps, actually. That's probably more accurate. And it did have a run-up. I believe it ran up to 45 that day, then pulled back into a correction. Very, very common. Now, don't forget, the market itself has been weak for much of that time. So in some sense, Facebook was moving in tandem with the general market. And very, very common to see a rally after this initial pullback in a new IPO, which offers investors a buy opportunity. And you know what? I'm pretty comfortable. I don't make predictions. I have no idea when this is going to happen, what news is going to spur this, whether it's going to be the market, whether it's going to be earnings, perhaps an acquisition that Facebook makes. Who knows? But I am pretty comfortable saying, yeah, at some point, this thing is going to rally. And it's going to offer some pretty good buy opportunities for longer-term or swing traders. You know, on a day trading basis, I already know it's offered some opportunities on both the long and the short side. I know people that have capitalized already. Now, if you take a look at Facebook, it does have some double and triple-digit revenue growth. It's expected to earn 51 cents a share in 2012, which would be a 9% earnings increase. Let me see. Let me just make sure. Yes, a 9% earnings increase over 2011. That's expected to improve pretty significantly in 2013, though, with 65 cents a share expected. Now, of course, as I've said for many, many years, these are estimates. Estimates can be wrong. And don't forget, they're often wrong. They can be wrong to the downside as much as they can be wrong to the upside. There's the good old sandbagging effect that comes into play. But also, let's just be honest. Despite all the models in the world, you have all kinds of events that the analysts just don't foresee. Of course, there's the global macro events and company-specific events. As I mentioned a while ago, you just don't know what could happen here, what kind of deal, what kind of joint venture, what kind of acquisition this particular company could announce that could perhaps be accretive to the bottom line quicker than the analysts have estimated in their models. So, in any case, my point being, yes, this has been a high-profile debacle, but one that, nonetheless, the company itself does with all of these users worldwide. As a friend of mine said recently in one of the interviews I did for Money Show, a company with that many users, that many millions of users worldwide is doing something right. So I want to come back after the break, and we are going to look at some other recent IPOs. I want to talk about some IPOs in the pipeline, too. There's some fairly well-known names that have filed for their IPOs coming down the pike, and those could be very interesting. A lot of them do end up being on the smaller cap side. I'm Kate Stalter. Give me a call, 877-927-6648. Be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Welcome back. I'm Kate Stalter. This is the Small Cap Roundup, and as you may have heard in the promo there, we did just recently launch the Low Price Leaders newsletter a couple months back, and it is encouraging to see right now there do appear to be an increasing number of long opportunities. I am looking for companies that have sound earnings growth driven by revenue growth, and that's more typically what you're going to see in the smaller companies, because as I say just about every show, they don't have the room to trim the fat as much the way the bigger companies really can do and have that appear on the bottom line. So in addition to, let me just give you, as you heard in the promo, I'll just reiterate that. What we look at are stocks priced between $5 and $12, no penny stocks. And these are really swing trades. I'm looking at key moving average support. That's mostly the way that I do make my buy and sell decisions, also taking into account perhaps some of the chart patterns and how they're performing, but moving averages are the key determinant in my investing/trading methodology. Also looking at liquidity. I prefer not to go into a lot of these extremely thin names. There are some exceptions. There are some stocks that perform very well. Let me show you one just while we're on the topic here. I'll give you a little clue of what I'm talking about here. This is a stock I've talked about a lot. This is something called Anika Therapeutics. They make treatments for bone and cartilage disorders. Now, this is one that had a beautiful run-up. This is, to quote Tom O'Brien today, a beautiful thing. I really liked how this particular stock looked. Had a big run-up between, let me see here, that was November and May. And, it's not surprising. If you're kind of looking at what's happening here, I'm indicating this on Tiger TV. If you look at what happened here, really not surprising to see a pullback after that juncture. You notice here, there's a big gain. I'm indicating there on Tiger TV. That was that week there. I believe that was back in April, right? That was mid-April. Now, what happens if you see a stock, and it gapped up back here earlier, in fact, if you see a stock have a big run-up like that, and then after running up for many, many weeks in a row, I mean, this had been for, I don't know, it had been, let's see, November, December, January, February, March, April, May. So, yeah, so about 6 months, 5.5, 6 months it had been running up. When you see a big gain like this one, I'm indicating right here, after there has already been a sustained uptrend, that is often a clue that your uptrend is running out of steam, that for the moment, there may be less and less new money coming in. And that doesn't necessarily mean you have to sell at this particular juncture, but you might want to be on alert that this rally could be temporarily at least ending for this stock. That's what happened. The company reported earnings, and I believe they did miss, but nonetheless, the outlook is pretty good. And as we all know by now, stocks get whacked. If there's anything in the report that could be perceived as disappointing, and don't forget, frequently, the investors and the traders are looking for some excuse to take some profits. And if there's anything at all that's perceived as somewhat disappointing in that report, it can often just provide a good excuse to get out. So this one here, let's see, it is now, as you see, it's consolidating. It's regained its 50-day moving average. I'm going to put this back up here on a daily chart for you. Regained that 50-day moving average, so some pretty good technical indication right there. Double-digit earnings growth expected in the next couple of years. So I continue to watch this one. And if you are a follower of the newsletter, you're aware that this is one that I am continuing to watch. It's been a little bit of a longer-term trade, but I'm going to reevaluate this one relative to its key short-term exponential moving averages tomorrow or Monday and see what kind of opportunity might come up. Now, the reason I brought this one up, this is an exception to the kind of liquidity I typically like. This moves only about 175,000 shares a day. It has a market cap of about 200 million. Now, this one is actually out of that IPO range that I have been talking about. Went public back in 1993. But I wanted to bring this up in the context of talking about the newsletter. So when we come back, I'm going to talk about some IPOs in the pipeline, companies that have recently filed, what we can expect. I'm Kate Stalter. This is the Small Cap Roundup. We'll be right back after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we are back here on the Small Cap Roundup. We had the European close, and despite some comments there from Mario Draghi, I guess that dragged down, pun intended, some of the European stocks. We do have the U.S. indices actually moving up a little bit off earlier lows, so an improved performance. Who knows, we might have our 2 o'clock, I have to get my time zone straight here, the late afternoon, let's put it that way, the late afternoon market miracle, as a friend of mine facetiously calls it, but when everybody does pile in. I keep forgetting it's not a Friday. It's just this weird kind of week. So we do have one more day to go. So who knows? We might have that late afternoon market miracle once again. Be interesting to see. Okay, let me talk a little bit more about some of the IPOs and just talk about what we have in the pipeline here. We have a biotech called Global Immune, developer of cancer and infectious disease treatments. Now that one actually just filed this week to go public to raise $69 million. So that sounds like one of those typical small biotechs. I talk about these a lot because many of them you do see the price running higher in the absence of any kind of earnings growth or revenue growth. Sorry, I just got distracted there. Yeah, I left the chart of Hanukkah up because the company I'm talking about is not yet public. I can put an IWM chart back up there just for fun. What the heck? There we go. Okay, so I'm going to be talking here about companies that are not yet public, that are just in the IPO pipeline. So there are no charts for any of these yet. Let's see. Biopharmaceutical Global Immune, that's one. Here's an interesting one. Marathon Petroleum. And this is a limited partnership called MPLX. Now, these petroleum pipeline midstream limited partnerships are pretty interesting because they are often some of these big dividend payers, and they have become very, very popular with investors who want to seek dividends in the volatile market condition. A lot of these things just pay crazy dividends through the roof. So that's pretty interesting. But, of course, that's not necessarily, these are not necessarily some of the bigger growth plays that I like to track. But, nonetheless, the idea of getting paid to sit through and own one of these, even when the market's in a downturn, has become very appealing to a lot of people. Okay, so that's one. Let's see what else we have. Coty, the beauty company. Now, this is one that, if you've been paying attention to some of the news with Avon, what's been going on with Avon products, just for fun, let's get a chart of Avon up there. It's not a very fun chart. You do see that there have been a few little gyrations just depending on what the prospect for an acquisition might be on this particular stock. Now, Coty has made a bid, COTY, and this company has filed for an IPO. It seems to me that the reason for this particular IPO filing is probably related to some of what is going on with Avon right now. They're trying to raise as much as $700 million in, let me refresh my screen up here. Okay, you should still be seeing Avon there. They want to raise as much as $700 million. They have brands including Calvin Klein, so pretty well known. And of course, there's been this whole drama going on with Avon, what's been happening over there, the bid for Avon. So very, very interesting to see what happens with Coty, COTY, and who wants to bet what their ticker might be. We had ServiceNow. Here's one. ServiceNow. This one is public. I can show you this one here. NOW is the ticker. This one went public just recently, just couple weeks ago, and as such does not have any kind of trading history. This is a really interesting example to show you. This is the kind of thing, it's moved higher in the past few weeks since it has gone public. Actually, just 2 weeks ago, has not sported that type of consolidation that you want to see, that you typically see in a new company. Now, let me talk a little bit about what this company is. This is a cloud play, and you know these cloud-based software companies have been some of the names that have gotten a lot of attention. Let's put it that way. It's a sector that is considered hot right now. Anything involved with internet content, for the most part, and of course, cloud-based companies are, because that's instrumental, no kidding, in how the content does get served up. So anything involved with internet content in any way, shape, or form, or online transactions, just tends to get a lot of media attention. It's hot. It's something that reporters are interested in. You're going to hear a lot about this. So when this went public the other day, this was in the media. They were ringing the bells and so forth. Went public just on June 29th. So very, very recent. You want to wait for that consolidation on this particular one to offer an opportunity, some excellent double-digit, triple-digit revenue growth. Earnings growth has been pretty good in the triple-digit range when it comes to increases. In most of these quarters, it had a 5-cent a share loss in the quarter ended in, about a year or so ago. So there have been a few little hiccups, but we'll get some more data on this one. Let me just pull up my chart here on a different screen and tell you when this particular one is... No, there's no estimate yet for when this one will report earnings. So that'll be interesting to see, and we'll get a little better picture of what the fundamentals of this one potentially are. But that's one that's gotten a lot of attention right now. Let's see here. Let me just come back to what we have in the IPO pipeline, talk a little bit about what we've got coming along here. And again, these are not yet public. Linn Company, L-I-N-N. Now, this is obviously, it's related to Linn Energy, but this is an interesting one. This is kind of one of these financial transactions, really, rather than an operational transaction. It will own interests in Linn Energy. And Linn, of course, trades under the ticker LINE, but that's not what this one is going to trade as. This one will trade under LNCO. Oh, and the disgraced Barclays is the underwriter on this one. So, interesting. So that's another one of these energy plays coming up, but that's kind of one of these oddball things that is really a holding company rather than any kind of operational company. So that's kind of interesting. We've got another one, Susser Petroleum Partners, another one of those petroleum energy limited partnerships. And one more. Oh, okay, here we go. Here's a couple I wanted to tell you about. Vitamin Cottage, natural grocery store. That's one that some of you may know about. I have one of these up the street from me. And the Fresh Market, as you know, went public not long ago with a bit of a smaller rival to Whole Foods, and Vitamin Cottage fits in that exact same category. And Autotrader.com, some of you may know about that one too, where you go and sell cars. In fact, I was just talking to a friend of mine the other day who's trying to sell a classic 1986 Toyota Land Cruiser. Beautiful old vehicle, and I suggested Autotrader for that one as well. I've had good luck on there in the past. So Autotrader.com, and supposedly this will be the first internet IPO. Was the first internet IPO to file since Facebook. So let's just, out of curiosity, let's see what Autotrader, that should get quite a bit of attention. They are hoping to raise as much as $300 million in their IPO. So that could be kind of a small one as well. So these are some interesting companies coming down the pike. Now let's take a look now at some companies that actually are public. Look at some recent IPOs, and I'm going to put up a chart for one over here that I know Ken Shreve has talked about on his show, and I completely understand it because it's one that I have been tracking as well. This is a mid-cap. We just talked about Vitamin Cottage. This is sort of a similarly themed company, I suppose. GNC, another Vitamin Cottage there. Not at all, actually. They're quite different. Vitamin Cottage, despite the name, is more of a grocery store with all the natural bulk food items and all the supplements and all that kind of thing that you tend to expect in a Whole Foods or a Fresh Market or one of those, or a Sunflower Market, Sprouts, any of those. GNC, quite a different thing, just selling a lot of supplements, various skincare products as well. And as most of you know, they're a franchised operation in mini malls all over the country. Now, this thing is rallying to new highs. Looks like it rallied to a new high earlier today, as a matter of fact. Yeah, it is. It's trading its high today, 42.56, and at this moment it appears to be trading above its previous high of 41.95, reached back in late April. Now, this is pretty interesting. You can look here on a daily chart, and you can see this action here at the end of April when the market went into a very short-lived little rally attempt and then pulled back again. And this is a good illustration of how a stock tends to behave along with the general market. So GNC is one of these that fits very nicely into the recent IPO theory, if you want to call it that. Went public in, let's see, late March, early April 2011, right around that time. I'm looking on a weekly chart. So sometime late in the first quarter of 2011, went public at $16. Obviously, right now it's trading above 42, so you can see a nice gain in this one. Now, this did offer exactly the kind of, let me put this back on a weekly, and I'll give you a little better view here so you can see it kind of rallied out of the IPO. It pulled back, would have offered a buy opportunity back here. Actually, a better one back here coming out of this little consolidation. And that better opportunity, as you can see there on the chart, followed the market-wide downturn that we had in the summer of 2011. And after that, really, it's more or less been off to the races, had a bit of a decline below some key moving averages right in this area I'm talking about. Some decent volume lately as it's been rallying, but of course, don't expect much from most of these stocks in terms of volume this week, just due to the particular holiday scenario that we are in. So that's one, and of course it's retail numbers day. We're seeing some mixed results out of the retailers. We are seeing some of the winners, such as Ross Stores, I believe TJ Maxx. So let's pull up a chart of TJ Maxx, because Ross and TJ Maxx had some pretty close comp numbers they reported this morning. And it's pretty funny, right here in Santa Fe, right up the street from me, they are right next door to each other, Ross and TJ Maxx. I love that. I think it's great. I guess the companies must like it too, because I can only assume that if folks are out bargain shopping, it just gives them the opportunity to hit both stores. Why not? So you do see TJ Maxx rallying today as well, along with Ross Stores. So the retail, some mixed results out of retail today. And let's see here. I want to show you another IPO. I've talked about it before. This is a pretty interesting one. Ellie Mae, nothing to do with the Beverly Hillbillies. This is a mortgage originator. Now, this particular stock went public. I'm going to put it up on a weekly chart for you there on Tiger TV. I think it went public, I believe it was back in 2009. Let me just double check some of the dates for you on that one. In any case, actually no, it was newer than that. April 2011, so you are actually seeing it right here on the chart on Tiger TV. And you see the big decline this one formed here, and there you go. There's the uptrend that offered a buy opportunity. Now, this is another one. I was showing the chart of Anika Pharmaceuticals a little while ago, and this is another one of these that you've seen this big rally, and it really does appear this would be due for some kind of consolidation in the not-so-distant future. Of course, right now, there's been some optimism about housing. So you have seen some of these mortgage originators. Ellie Mae, NSM is the other one. I talked about that the other day, which is one that if you're following the newsletter, that's a good one right now. Just putting that out there. So these are a couple that have been trending higher with housing optimism. Come back. We've got a few more minutes in our last segment after this break. I'll be right back. I'm Kate Stalter. This is the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, we're back. We're saving the whales in the tiger den. If you're in there, you know what we're talking about. So let's see. Let's move on here. Nothing to do with the J.P. Morgan whales. I'm going to rant about that a little bit. Just a moment. I'm going to get back here to IPOs just a moment, but I kind of thought it was a little bit unseemly that this rogue trader had a cutesy little nickname called the Whale. I thought that just sort of went to some of the problems that we do see in some of these trading operations at these big banks, that some of these parties have these names that are kind of designed to be cute and funny. So in any case, let's move on here. We are looking at some recent IPOs. There's a few here I wanted to talk about today in the last couple of minutes. Let me show you one here that is pretty interesting. This is HomeStreet.com. This is a small bank up in the Washington State area, headquartered in Seattle. Now this is very small. It's got about 20 branch offices. Market cap, this falls squarely, by the way, into the small cap bailiwick. 229 million market cap, very thinly traded, so it really doesn't pop up on the It comes up on some of my screens, but not really the ones I track for the newsletter because I like more liquidity in some of those. But let's just talk about it today because it is pretty interesting for those of you who are willing to take a little more risk, perhaps, on some of these thin names. Trades about 29,000 shares a day. Now, this is an interesting company because it went public. The reason it went public was to recapitalize after nearly going into bankruptcy in the whole banking crisis of the last few years. And they brought in a new CEO, and he and his team decided to do an IPO, and they raised some money here. It's been a successful IPO. Let's see here. Expected to more than double earnings this year. And that's expected to decline a little bit in 2013, but nonetheless remains strongly profitable. It's often the case that you can't really sustain those incredibly high levels of earnings growth, but this is somewhat of a turnaround story, so it is kind of interesting. HMST. So this is one that I've been looking at, but just to let you know, this is not the kind of thing that is going to necessarily show up in the newsletter. We could certainly talk about it here. It's just a little bit on the thin, very much, in fact, on the thin side, and what I view as pretty speculative. Let me pull up another recent IPO here. The ticker is RNF, and it's one that I was looking at a little earlier this morning. In fact, it came up. I was working on one of the stories that I do for Real Money over at TheStreet.com, and I happened to notice this one. Another recent IPO. You had a pretty ugly correction here recently. This is called Rentec Nitrogen Partners. It's one of these fertilizer companies, and they went public back in November, had a big run up here. You can see that on the weekly chart, and then this pretty sharp correction. Been rallying recently. Now this one is pretty small, market cap of about $1 billion, but it's got the kind of liquidity that I tend to like. About 367,000 shares a day, moving on average. So this has some potential. I'm going to be looking at this one a little bit. I don't really like the estimates for 2013. A bit of a decline in earnings, but that's kind of what I was talking about a moment ago with Home Street, is some of this is not sustainable every single year. Okay. That's a wrap for today. I will be sitting in for Tom tomorrow afternoon in the 5 o'clock hour, so I will talk to everybody then. Have a great day until then. Thanks for listening.